Thank you so much for joining me, Barbara. This is Barbara Colvin. She is with Integrity Realty and Investment Services. She has been a realtor for 10 years. She's now a broker owner of her own real estate company. And we work together, and she has just been a wealth of information. We had a great lunch last week, and we started talking about some really interesting topics about today's market. And we stopped our conversation and we're like, we really need to do a video on this. So we set this up and invited Barbara to my office, and we would like to share some of those conversations that we started chatting about last week. And I'll just start. I have a few questions for you.
Okay.
I think the biggest thing that a lot of buyers out there right now are kind of weary about purchasing, or really knowing like what is going on in today's market. So is now a good time to buy, or is waiting the best strategy right now? So I'll start with, what is the market like? What is the supply and the inventory like right now in today's market compared to maybe 6 months or a year ago?
Okay. So the market right now is a little bit less as far as on the resale homes. There's inventory overall is a little bit low still, with the influx of people that are still moving to the Austin area.
Okay. So inventory is still low. How does it compare to maybe like a normal market? Are we still lacking inventory because people are afraid to move, or is it the inventory that we have right now? How does that compare to inventory that we've had in the past, like maybe before COVID?
Okay. Well, so even before COVID, well, let me back up and just say, I think in today that we have about what I was seeing was about 3 months worth of inventory in some of the areas in Austin. And
what does that mean? 3 months of inventory. Does that mean like the average home sits on the market for 3 months, for 90 days, or what does that actually mean?
Well, so that means that if you were to sell all the homes that were on the market, we would have a supply for about 3 months.
Okay. So we have a supply for about 3 months right now. Is that healthy? Is that still like a competitive market, or how are offers going out there right now? Is it where people can get what I like to call a steal of a deal? Like, is that even a thing in today's market?
Well, a healthy market, from what I've learned, is that it's balanced at about 6 months of supply. So we're still not there yet. There is still the demand because people are moving here. However, there's not the same amount of inventory as would make it a healthy market. And as far as the steal of a deal, you're going to be looking at, since interest rates have come up, what I have seen is some sellers on the resale have started dropping and adjusting their prices, downward. And to that end, comparatively to a year or so ago, it is a lot better as far as pricing. Although rates have gone up a little bit, but I wouldn't let that deter a buyer just because the rates have gone up, because you can change the rates by refinancing, but you can't always change the price to what it was a year ago or two.
Right. And that I think, I can speak to that a little bit in that, like, yeah, interest rates are up right now. They're not cute rates. I like to tell people they, are higher interest rates than I think what we've seen in most of our immediate buying memory. There's some seasoned veterans out there that remember buying in the 80s that can attest to the double-digit interest rates that were in, 10% to 18%. Yeah. So, 7% right now. It's kind of the average 30-year fixed interest rate, depending on the scenario. Up or down a little bit, give or take. But that's for like an owner-occupied home. But in comparison to how interest rates have been over the last 40 years, 7% is not, in the scheme of things, bad. We have been spoiled by these super low interest rates that are just historic, and not healthy. Honestly, they're not healthy interest rates. They're we love them. We feel like they're healthy because we love having that low payment, low interest rate. We can afford more, but economy wise, having that low of an interest rate isn't healthy. So these 7% interest rates may not be super healthy either. It's kind of getting, not that 7% is an extreme, but we're not getting those super low twos, but we're not getting the 18%.
Yeah.
So, what economists are starting to say is that interest rates will start to drop, hopefully by the end of this year is what they're thinking. We might end the year in maybe the high fives. And then hopefully by next summer, maybe the end of next year, we'll kind of plateau into the low fives, upper fours, and maybe stay that way. And that would be a healthy market. That would be a healthy interest rate. So if we can get that inventory up and the interest rates down a little, then we have what is ideally a healthy market.
Yeah, I would agree.
Yeah. But go ahead.
Oh, no, what I was going to say is what some buyers or investors don't realize is that, you may be paying higher in rate, but your price has gone down. And then as opposed to where before the rate was really low, but the price was higher.
Exactly.
So you can change the rate, but you can't always get the same pricing. So,
right.
Wouldn't that be nice?
Yeah. Well, and
if it was low and low.
that is like what I see as a opportunity in today's market is to buying now, I feel like, is an uncomfortable but smart decision. It's uncomfortable because we have these high interest rates that we don't like, but it's smart because you can get a decent price. Whereas a couple years ago, we were bidding, way over. I know our house, we sold 2 years ago and it went for $140,000 over asking price. Although that's when interest rates were 3%. And I believe that there's a lot of people sitting on the sidelines right now that are not purchasing because they're waiting for that low interest rate. They're waiting for that perfect scenario. But guess what? That perfect scenario happens and everyone's going to come back in the market. And I feel like when that happens, it's like taking a fire hose to a sidewalk with ants, and you put water on the ants and the ants disperse. But when it dries, the ants come back because they're not dead. They're there and they're going to come back. And I feel like it's the same with buyers in today's market. So I believe we're going to have that competitive market once rates drop because we're being held off right now. But the true desire or the true demand is still there. It's just that the fear of the interest rates of us not getting that rate that we were teased with for a couple of years is not there.
Yeah, and I think if buyers can get that mindset that, as I mentioned, the price may go up or down just like the interest rate might, but the interest rate you can change. The price that you bought it at is what you were able to secure the home at.
Exactly.
So, and, I do see sellers today being a little bit more willing to negotiate in that, so to get their house sold because of the lag in the number and quantity of buyers. So I think if they get the mindset that it is a good time, that you can always refinance, then it's a good thing.
Yeah, I believe that is right now the best strategy to get the best of both worlds. Home prices are not going to go down. We do not expect that to happen. We do not expect home prices to drop. But we are seeing some price corrections. And, just as buyers have been spoiled with low interest rates, sellers have been spoiled with high sale prices. And we're both having to kind of adjust to that happy medium of what is realistic for both of us. How can we come to a mutual agreement on agreeing to purchase now with a high interest rate or higher interest rate and refinance later, and the seller to maybe come a little bit off of their price from what they were hoping to sell for. And then that strategy of buying now, refinancing when rates drop. You're getting to take advantage of the market where there's not other buyers out there that are necessarily swarming the market, and you're having to compete against 10 other offers. You're able to make a decent offer, maybe even get it below asking price, and then refinance later. I think that is my...
No, I would agree. I think if you do that, then it will end up being a win for you, because you've received a low price. And then to start, maybe not with the interest rate, but when you refinance, then you're at the win-win spot.
And the other thing is, like, if we could go back in time and travel back to 2020, 2019, everyone would, if they knew how the market was going to go, everyone would try to get as much real estate as they could in 2018, 2019, because of the boom that we saw in 2020, 2021, 2022. And I feel like that's the same situation that we might have right here, is this kind of calm before the storm. And if we could have a crystal ball to see into the future, would we come back to ourselves in 2023 and be like, man, I wish I would have bought when there wasn't people going over asking price? And now I think over the next few years, we're going to see some growth, maybe not as much as 2022, 2021, but I still feel like, at least in this Austin area, we are posed for a great growth, with all of the tech that's coming here and medical jobs that we've built in this area.
Yes, everybody's coming to Texas. It's a great state.
It is. No income taxes, or state income taxes, which is appealing. And one reason why we will probably never leave Texas, because that is a perk. And it's beautiful here. It's hot right now. It's July, but it's a great place to live. So I have a couple more questions for you. So for clients that you have that are on the fence, what is their biggest objective right now? Is it interest rates? Is it their lack of choices in the market? What is their biggest issue?
Well, I think some of the buyers are holding back because of the interest rates, and maybe they haven't had that education with a seasoned lender that's going to explain to them, the historical rates and the benefits of, buying now, and then you can refinance. So I think some of them are stuck on the interest rates, and then and just thinking that they're not able to afford to get into a home when they possibly can.
Yeah. There's some really cool products out there right now. Like, I have a 1% down conventional loan. So, if they have a high debt to income ratio because of the interest rates, like maybe they're not able to get the house that they want because the payment's higher, because the interest rate's higher. There are some low down payment programs, and a strategy in that would be, let's say they have maybe $10,000 and we only need $8,000 for closing. They can use that other $2,000 and maybe pay off a few credit cards that helps us get our debt to income ratio up. So I have this conventional 1% down program. So they give you, it's a 3% down loan, but they give you a $4,000 grant that is just free money. That's not, you do have some income restrictions depending on the county that you're purchasing in, but there's no strings attached to it. Whereas a lot of down payment assistance programs, you kind of pay for that grant in the interest rate. So, you're getting this money, which is helpful with down payment, but you have a much higher payment because the rate on those programs is higher. But this program is just a conventional loan. There's no payback period for the grant amount. And it just is it's a tool in the tool belt, in the toolbox that helps you to be able to strategize with a lender to be able to find some options that might help you qualify for a rate now. And again, these payments might be uncomfortable if you qualify. I don't ever recommend buying a home that you aren't
exactly.
That is too strapped for you, because there's never a guarantee that interest rates are going to come down. But making the best educated guess that we can with the information provided, almost every single lender out there knows that interest rates are going to come down, and they've priced their loans accordingly. So being able to qualify yourself now, and maybe being a little bit uncomfortable until those rates drop, and then refinance, and then you're sitting a little bit better and can breathe a little bit easier.
Yes. No, and that's why I think that an important step for any buyer is to talk to a seasoned lender and find out what programs that they have that might be able to help them get into a home where they thought maybe they couldn't.
Yeah.
So for sure.
Yeah. At Edge, I have access to 161 different lenders. So I am a broker and able to access endless different loan programs that, if one program doesn't work for a buyer, what can I do to get them into this home? And and even those 161 different lenders that I have access to, they have a plethora of loan options for each of them. So it's, if someone isn't able to qualify right now, I set them up on a plan to show them exactly what steps they need to do to be able to qualify. Because in today's market, I just feel like to not own a home, to not own a piece of property is a missed opportunity. And I know that for my family, owning real estate has been such a blessing for us. And my passion is, how can I help others grow their wealth in real estate with their family? Because you have to start somewhere. You have to start with, even if it's not the most desirable house that you want, you have to start somewhere and then grow from there.
That's exactly right. That's exactly right. And that's why it's important to use a experienced and seasoned broker and an experienced and seasoned
mortgage broker.
Go with the brokers.
Yeah. Well, awesome. Well, thank you so much, Barbara, for coming to meet with me today. Is there anything else that you wanted to chat about, or?
Well, so I wanted to ask you, because I sometimes have buyers that are looking at new construction homes. And I was just curious as to how you can you compete with a builder's lender, and can you work with investors, and how you can help them?
Yeah. Okay. Those are two great questions. I'm so glad that you mentioned that, because I get asked that a lot. I get asked the new construction question a lot. And then I'm super passionate about the investor question, so I'll answer that separate. So with new construction homes, most of the deals out there that builders are offering can be matched with a broker. We have so much flexibility in our pricing that most of the builders out there will offer maybe a $5,000 lender credit. But if you really look at the itemized estimate from the builder's lender, you'll see that you're kind of paying for that either in the interest rate, or the origination fees might offset the builder's credit. So it's important to look at all of the pieces of an estimate when comparing the builder's lender, because it might sound great. Oh, I get $5,000 in free money, or $6,000 credit, or something like that. But it's super important to really look at those details and compare apples to apples to what you're looking at, because you can always make something look great. And then when you actually break it down, it might not be any different. And then, you have a broker typically it's very seasoned and knows what they're doing, and you've got that person on your side, whereas the builder's lender works for the builder. So their loyalty is to the builder, whereas my loyalty as a broker is to my client and to my real estate agent. So I do everything I can on my end to try to match. And there are times where I can't. And I am 100% honest. If I can't come close to that, go with the builder's lender. This is a steal of a deal.
Yeah.
And you know, and then they're happy with that. Their clients are happy that I am able to be honest with them if this is the best estimate. But don't go to a builder's lender and assume that that's the best deal you can get, because there's other options out there, and that might not be the best loan for you. There might be other loan programs out there that might be a little bit better, that might give you a little bit better of an interest rate or lower closing costs or a grant that have no strings attached to it. Builder lenders most of the time do not offer grants. So something to consider. Yeah. Now the investment, I have such a passion for investment properties because my husband and I, Nate, we love to buy investment properties. And what we usually do is we will buy them with the intention of flipping them and then end up Airbnb-ing them. And we've done that with, I think, 9 different properties now. And there is this new loan that has come out that is it's called a fix and flip loan. And you only so if you find a property that you like, you only have to put 15 to 10% down of the total loan amount. You can roll in the cost of the renovation into the loan. So I'll back up a little bit. On a typical investment property loan, you're putting at least 15% down, and the pricing will be really high, and you'll have mortgage insurance. 20% down, you get a little bit better of an interest rate, and 25% down, you get the best interest rate, but you're still looking at 8% on investment loans. This loan, you only have to put down 10 to 15% of the purchase price. You can roll in the cost of the renovation. So if the renovation is going to be $100,000, $150,000, you roll that in and you pay 10 to 15% of that, depending on the loan parameters and what you qualify for. And then there's no mortgage insurance. There's no income verification. There is no appraisal needed. And you can typically close in as little as 48 hours or as soon as title work is done on the property.
Wow.
That's
impressive.
Amazing. It's amazing. It really is like a flipper's dream. Yeah. And it opens it up to people who may not be flush with cash, who want to try to flip a property, but maybe don't have that ability to put, $300,000 into a project. So this is a great tool for people who, maybe they've got some cash, but they don't have that 300,000. Well, how do you ever get that 300,000? Right. You have to build up to it. And how do you get your foot in the door? And I feel like this loan is a great foot in the door for that investment opportunity. 10 to 15% down and rolling in the cost of the renovation. The interest rates are typically between 9.9 and 11.9%. And the closing costs are decent on it, like decently priced, like a little bit expensive. But if you add that into the cost of what the home is going to cost you as far as like the origination goes, it added into your profit and loss of the project, then you can plan it out accordingly and just know that you've got these set expenses. This is the interest rate. This is the interest you're going to be paying, and just build that into your scenario when you go to look at making an offer on a property. But great tool. Love those kinds of loans, and I'm super excited to be able to originate those now. Yeah,
does sound like a great product.
Yes.
For sure.
Yeah.
So, Kristi, tell me why we should use, or a buyer should use Edge Home Finance.
Okay. So I don't think it's necessarily Edge, and not to put Edge down. It's just Edge is the company that I put my license with, but you could have a great mortgage broker at any company, and you could have a really bad mortgage broker at any company. And so I think it was really to look at an individual and what their capabilities are. So for me, I've been in lending for 17 years. So my experience speaks well. And now that I'm at Edge, I have the ability to go broker loans and go to 161 different lenders and search and see what the best price is. What are the pros and cons of that loan? What do they offer? And so basically, I am like a personal mortgage shopper for someone. So I go out there and I search all of the different options and I bring back the best one. And what is best. And my experience is what determines what is the best loan for this person. So you might have the lowest interest rate on a loan, but maybe that's not the best parameters that fit this person's needs.
Right.
And so with my experience, and now I have all of these tools, it's the perfect combination for someone to be able to have like a one-stop shop with a broker, because I can go out there, I've got my experience under me, and I can go out and shop all of these different options. And so that's why I feel like if it's not me, an experienced broker with a great reputation, they're going to have the ability to get the pricing where it is a little bit more competitive than maybe some retail lenders out there.
Yeah. Well, I can attest, because I've used Kristi's services both personally, and then have referred her to numerous clients that she and her team have helped, and she's amazing. She's amazing, Barbara. And she is a wealth of knowledge. So it's good to work and partner with someone that has the experience, has the knowledge, and has your best interest at heart, as I do with my clients.
And the same thing, not to like bounce back and forth compliments, but the same thing with me. Like, I have worked with some inexperienced realtors and I love them, but it is nice to be able to work with a realtor who has a lot of experience under their belt, because the transaction just goes so much smoother. So I know when I get a loan from you, or I get a contract from you, I'm like, okay, I don't have to worry about, what could go wrong in this transaction, because you have looked at every possible scenario for your borrower or for your client. And it's just nice it's a breath of fresh air to be able to work with really high quality brokers like you.
Oh, thank you. Blushing.
So I do have one last question. Okay. What would your best advice be to buyers out there who are deciding, whether to buy or to not buy, or even just, should we wait 6 months for when rates start to come down, or just real estate in general? What is your best advice right now as of today?
Well, I think number one would be, if you're considering buying, always first step, talk to the seasoned lender. Let them explain the programs that they have. Let them look at your finances, roll out the scenarios, and see if indeed it is the best time for you, or, as Kristi mentioned, do you need to follow a path to get there? And so always, no matter whether I'm working with, an investor or a buyer, it's talk to the lender. And with the clients that I work with, I don't go out with them until I know that they have, because it's beneficial for them to know what price point that they are able to stay in. Not that you have to go to the top end of the range, but let's not look at a home that is either way over budget or under budget.
Yeah.
So
I think that is valid right now in today's market. We might have a little bit of an unrealistic expectation of what payments are versus what we can get for that, or what payment delivers that purchase price, or what range we should be looking in. So yeah, talking to a lender first can help you kind of uncover what you're comfortable with as far as a purchase price and what you can start searching in. Otherwise, you might just start searching at a different price point than what you can actually be comfortable with.
Yeah. And it benefits them, because then they, the buyer knows, and then you're not spinning wheels and they're looking at this price point, and maybe they don't qualify for that. And then they're disappointed when they have to maybe bump down, or on the other hand, maybe they're, just looking at this price point when they do indeed, can qualify for something higher. So it's information that's needed. Yeah. And it will help them and help everyone that's working with them, as far as a lender and realtor, to know what they can afford, and to help them with their search, and to help them secure their home.
Yep. Great advice. Thank you for sharing that. Okay. Any other questions, Barbara, that you have?
I don't think so. I think we covered that.
Okay. Well, that was a great topic and a great
yeah.
conversation. Thank you so much for joining me and for coming here and chatting with me about real estate. It was fun to kind of go through these questions together. And we'll put Barbara's information up for you and my contact information. If you have any questions, both of us would love a chance to chat with you.
Yes. Thank you.
Have a good day.
Bye.